Welcome back friends to the class number 63. In the previous video we have discussed the concept of EBITDA or PBDIT. Now we want to see what are the drawbacks and limitations of EBITDA. I have listed down the three major drawbacks of EBITDA calculation. So let us start with the first point. So when we calculate EBITDA, there is no universal standard for its calculations. We cannot say that EBITDA has to be calculated like this or has to be calculated like this. There is a lot of scope of management biasedness in the calculation of EBITDA or the analyst's biasedness in calculation of EBITDA. How? For example, there is one item called stock-based compensation. So you have a company and your employees are taking salary from you. So when you pay the salary, you pay the salary in their bank account, you pay them by bank, right? By paying in by transferring the amount in their bank account. So sometimes what happens that you pay your employees by issuing your shares, ESOPs, that we call employee stock options plans. You pay employee salary by issuing the shares of your company. We call it stock based compensation. So practically you are issuing the share of your company. So there is no cash outflow involved here. But all these stock based compensation or the salary that you have given to your employees will be reflected under the salary head, right? So whether we should treat them as cash expense or whether we should treat them as a non-cash expense, it is purely an analyst's call or the management's call. Some analysts, some big players, some big professionals are of the view that this amount is as good as cash only. You pay your employees by way of stock issuance, and this amount should be treated as at par with the cash expense. But some of the analysts or some of the managements are of the view that there is no cash outflow involved here, so this should be treated as non-cash expense and should be added back while calculating the EBITDA, right? Now the legal settlements. You have done any legal settlement with the entity, you have incurred a heavy expenditure on your legal settlement, heavy lawyers fees, and whether we should treat this expense as exceptional expense or non-operating expense, there is a lot of biasness involved in it, right? Restructuring charges of your loan, similar nature. Lease rentals, some analysts are treating lease rentals as good as your interest and principal on your debt. Some are treating it like a normal administration expenses. If you treat it as a normal like principal interest on the debt, then you have to add it back like you have added back the interest in the calculation. If you are treating it as a normal expense, then you have to remain silent, and this amount shall be deducted while calculating the EBITDA margin, right? But modern analysts are of the view that lease rentals should be treated at par with the principal and interest of the debt. So in most of the cases that we will see that lease rentals are added back like interest in calculation of EBITDA, right? So these are the examples that I have given to you, which are based on purely an analyst's judgment and purely dependent on the management's judgment how they want to calculate the EBITDA. So if the different assumptions are used by the two different entities working in the same line of business, then the EBITDA comparison between these two entities may not reflect the accurate picture to you, right? Now coming to the second point, when we say that in EBITDA calculation we are taking the net cash operating inflows, there is still some gap. It still doesn't reflect the actual cash flows in the business. It can still be misleading. How? So suppose you have done sales of rupees 100, you have done purchases of rupees 80, and this is your profit of rupees 20. So there is no non-cash expense, non-cash income. There is no extraordinary expense or income. So what will you say? You will say that this 20 rupees profit, which is obviously before tax, represents my EBITDA margin only, because there is no depreciation, amortization, non-cash expense, extraordinary expense, incomes, etc. So this is as good as EBITDA only. So what if I tell you that this whole 100 rupees sale is done on credit, and not a single rupee is recovered from it as of yet, and no amount is paid on these purchases as well. So all of these amounts are presently recoverable and payable. So these 20 rupees do not represent your actual cash profit in the business, right? So therefore, when we calculate EBITDA, some people get confused that this represents your cash profit, but no, EBITDA is never your cash profit. If you consider it equivalent to cash profit, then you may have inaccurate results or judgment in your balance sheet analysis. Third and the last point is the manipulations involved or window dressing involved in the balance sheet. You calculate EBITDA from the profit and loss account. So based on EBITDA, you try to judge the entity's profitability, the entity's earning capability. So in order to create a dreamy picture in your mind or rosy picture in your mind, the entities can manipulate their balance sheet or profit and loss account very easily. So they can inflate their earnings through aggressive accounting, like not charging the expenses in the profit and loss account, deferring the expenses, capitalizing the expenses when they are actually in the nature of revenue expenses. So all of these will help in inflating the profits only, and in turn inflating your EBITDA margin. So this window dressing, this manipulation can lead to inaccurate results in EBITDA margin calculation, right? So now you will say, sir, you have told us the drawbacks of cash profit calculations. You have told us the drawbacks and limitations of EBITDA calculation. So what is the solution then? What is there any financial statement that we can trust? Is there anything that we can trust which reflects the true cash generation in the business? The answer is yes, and this will be our next topic in the class number 64, that is cash flow statement. It is the most reliable financial statement of the entity, and it reflects the true cash generation in the business and overall cash inflows and outflows of the business. We will study about the cash flow statement in the next video. Thank you for watching.